Hello and welcome back to All Things Money. I'm your host David Blain, and during this segment we're going to talk a little bit about long-term care insurance. This is as America, the baby boomers continue to age, and all the debate surrounding medical costs and Medicare and Medicaid, the future of these programs, get a lot of questions concerning long-term care insurance. And I'm going to give you the answer based on the pure finances of it. We are not insurance agent. I am not an insurance agent. We don't employ insurance agents. And in fact, as a fee-only advisor, it is against my code of ethics and fiduciary oath to even hold an insurance license. We will not employ anyone that holds an insurance license. However, we do have a great deal of expertise in insurance issues. We have insurance agents that work with fee-only advisors that serve as our in-house experts, even though they don't work for our company, but they do not sell policies to our clients. We design our insurance plans and make recommendations to the client for implementation by a chosen insurance agent. So my point of this is I have no vested interest in this other than what is right for the client. And that's the key. Is I'm going to go through a few principles here today, but each situation is unique. It's just like anything. You hear that long-term care insurance is the solution for everything. It solves everything, every problem you have in old age. And then the other hand, you hear, well, it's completely useless, not appropriate for anyone. And like most things in finance, the answer really is it depends. So I want to run through some of the basics of it as well as the pro and con argument. So long-term care helps pay for the cost of extended nursing care in your old age. When you can't fulfill some of the basic needs such as feeding yourself, taking a shower, things like that, long-term care insurance can pay for your stay in a facility, and a lot of them also pay for home health care to send a nurse around to your house. Nursing home, assisted living, all these type of things are very expensive, and there's no telling how long you would need to be in one of those facilities. And so buying long-term care insurance can be a way to make sure your future needs will be met. Policies designed in partnership with some state agencies through the Medicaid program also offer some of these things. Critics of the policies say that insurance agents are using scare tactics to encourage people to buy these, that the policies are unnecessary, or they cost more than the benefits are worth. And so we wanted to talk about some of the pros and cons. So I'll run through some of the statistics from one side. Like I've talked about before on the show, statistics, you can make statistics say whatever you want, depending on the data set you choose, the time period, things like that. On the side that's arguing that you do need long-term care insurance, they show that 70% of those who reach 65 will need long-term care insurance. The average cost of long-term care insurance is about $250 per day. So at $250 a day, you do the math, a person's lifetime savings can be depleted really quickly. Now, as with most insurance, somebody that paid for a policy for many years and then actually used the benefit generally have no regrets. Someone that bought homeowners insurance and their house burned down are usually very glad that they had it. Somebody that didn't buy homeowners insurance and their house bought down are usually very upset that they didn't buy it. So there's no question about that. It's the people that pay for it and never use it that sort of have the mixed feelings. And so there's only about, I think the latest statistics I saw, around 8 million people that have bought long-term care insurance so far in the United States. One of the big misconceptions is that Medicare covers long-term care. Medicare doesn't pay for any long-term care insurance. Medicaid, however, does pay for various kinds of amounts for the very poor. But with states cutting back on Medicaid, access to this type of thing may be somewhat uncertain. people that are very wealthy can be reasonably assured they can meet their needs without long-term care, and people, frankly, that are don't have a lot of assets can't afford the premiums, and so really it's a moot point. It's the people in the middle, people with, say $250,000 to $2 million that are sort of in the middle, that may benefit from long-term care insurance, having this policy in place to pay for their long-term care in the future. Most long-term care policies have a 90-day elimination period. That means the first 90 days that you are in a facility, you have to pay for yourself. Then long-term care kicks in and starts paying for your stay at the facility or the home care nurse. Most nursing home stays are very short. Although if you run into several years stay, it can add up to quite a bit of money. The average person at age 55 for $300,000 of benefit pays an annual premium averaging $2,700, just in case you wanted to know. The other side of the story arguing against it is simply that the cost is too high. If it was available at a reasonable cost, which I think, for example, term life insurance is usually very reasonable for the benefit you get. One of the things when you look at out of the people that do need nursing home care, around 65–70% of the people are discharged within the 90 days. Hey, maybe that's why there's normally a 90-day waiting period. Whenever you're buying insurance, you got to remember the insurance company is in business to make money. And in aggregate, they make money. So in aggregate, on all the homeowners policies, all the auto policies, all the long-term care insurance, they're going to make money. And you should never forget that in aggregate, they are going to make money. Of course, you could take the premium and invest it and self-fund your insurance. That would be my preference. But if you're sitting there at 55, it's a little late to do that. My preference would be that you start that, in your 30s. But my big beef with long-term care insurance is if you look at, say, a $300,000 benefit policy that costs, $2,000 or $3,000 a year. If you look at a comparable amount of insurance on a homeowner's policy or auto policy, the rates are much cheaper, or even a life insurance policy, the rates are much cheaper. So they can be very, very expensive. Well, we're running out of time for today's show, and this is not something we're going to cover in one segment. Maybe we'll come back and talk a little bit more about this next week. So for All Things Money, I'm your host, David Blain. I hope you enjoyed the show today and that you will tune again at the same time again next week.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.